This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Happy Monday. Welcome back. This is Not Your Advisor with NYU Grad. Let's jump right into the markets today. So taking a quick look at breadth, we had 139 new highs versus 390 new lows on the NYSE. We had 34% advancing versus 63% declining. 52% were underneath the 50-day and 46% below the 200. If you take a look at the indices, it was pretty deceptive sell-off. Now, I posted over the weekend a couple posts, but as you know, I watch breadth intraday as well as on the macro pretty closely. And this morning, I was sharing with the subscribers that there was no positive breath or oomph to the bounce because we were bouncing before lunchtime. Even if you looked at like futures market, right, through Sunday and this morning, the futures were up pretty big. So it just looked like we were going to bounce. But we opened and there was just no breath to the upside. Lunchtime came. From what I was reading in the market, it looked pretty weak. And I had posted first with the paying subscribers on the private chat that if this weakness continues, I potentially see the ES futures contract going back to the 6,000 level, and I drew it with like a image tool I have on my phone saying, look, we may go back to 6,000. So I'm sharing with you this screenshot of a negative divergence forming on the 5-minute chart on the ES. I was looking at breadth. I was looking at Mag 7. And it just felt to me like that was the likely scenario. So I drew it. I said, this is a potential outcome. And on the left-hand side, you'll see the actual price chart. I am no magician. I'm just reading the market. And I could have gotten it wrong. We could have rallied from there, no doubt. But if you've been following me for over a year, whether it's on the Substack notes, Substack posts, Substack private chat, I provide a play-by-play. My record is right there for all of you to see. And I'm not trying to toot my own horn here, but it's more in context of whether you learn from what I'm doing or whether you're learning from somebody with a Lamborghini video on YouTube. I want you all to start learning so that you can read the markets on your own and you're not beholden to some Joe Schmo or Jane Doe that, still buys their suits at Jose Bank and gets fed what to tell you. I know that sounds a little nasty, but I grew up in New York. Outside of staying healthy and being a good family member and working hard, managing your wealth, there's nothing more important than this. And I'm telling you now, the majority of Wall Street is set up as a sales and marketing.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.